Hey guys, in today's video, we're going to break down one of my favorite price action patterns, the inside bar and the inside bar breakout. I'll show you exactly what it looks like, what indicators can make spotting them a whole lot easier, and how you can use them both as a complete trading strategy on its own or an entry filter within an existing system that you use. We'll also dive into how buy stops and sell stops come to play when trading this setup, so by the end, you'll hopefully have a clear step-by-step process for taking advantage of this price action pattern. Has nothing to do with a wick. No. So an inside bar is this. An inside bar is simply a bar that completes, completely within the previous bar. So if this is bar 1 right here, this would be called the mother bar. I'm just going to throw some wicks on there because this is how bars usually look, right? An inside bar, right? So we know that the wick represents, pop quiz for you. What does the wick represent when it comes to a candlestick? The total of the extreme, the range. So this represents the range, right? The range of this movement was from this highest high to this lowest low. This is the range of the session, right? An inside bar is a candle or a bar that completes within the range of the previous candle, right? Doesn't matter what it looks like. It could be this. It can have a long tail on it. It doesn't matter. All that matters is that the entire candle is within the range of the previous candle. Does that make sense? So that's what we call an inside bar. Usually all platforms have an indicator that you can use for them. So if you just type inside bar, inside bar, I'm gonna click a random one, and you can see these green triangles or red triangles. These will show you all the inside bars. Now, what it means is essentially this, right? So, and again, we'll make this the stupefied Akil version, right? If this extreme was our range from the mother bar, and our next bar completes, completely within that range, what is happening to the range? Is it expanding or getting smaller? Yeah, it's getting smaller. So, and if it's getting smaller, this is pretty much contraction, right? Consolidation, but contraction. And, you could look at it like a wedge pattern is a good example, right? Where you see markets coming from this bigger range and then kind of contracting. And we know that contracting leads to the spring effect, right? Contracting leads to expanding. Yeah. So you squeeze a spring hard enough, eventually it has to go somewhere and it breaks out. So you can look at the inside bars as being the same way, as it's contraction in the market. And eventually at some point there will be a breakout. There are different ways to trade inside bars. In my professional opinion, I would use what's called a bias inside bar breakout strategy. And I'll explain that after I explain kind of the normal way. So a traditional way, not saying this is a best way, but a traditional way is what you do is once you have your inside bar, so this bar right here, what you would do is you would put a buy stop above. So a buy stop is a buy order. I know these things can get a little bit confusing because you're like, stop is always getting me out of a trade. This is a buy order that will put you in a trade is a buy stop. You put a buy stop above it. I'm going to shrink that up some. And then you would put a sell stop below it. And who can tell me what this does? Buy stop above, sell stop below. Yeah. So whichever way it breaks out, because you're expecting a breakout, whichever way it breaks out, it would trigger the trade. If price breaks out to the upside, boom, you're triggered long on an aggressive breakout. If price breaks out to this downside, boom, you're triggered short on an aggressive breakout. Another way of doing this as well is instead of just having them above the inside bar, you can also put them above the mother bar if you want like a more conservative approach. It'd be the same thing, buy above, sell below, but it would just kind of give you more, I don't want to say confidence, it would give you a different type of breakout. Now, I can tell you this from personal experience. If you simply try to, and I would recommend researching this as always, because don't believe anything I say, but if you simply try to do this on every single candle, every single inside bar, you would lose money pretty quickly. So my advice is to have what's called a bias inside bar breakout approach, meaning your general analysis of the market, right? All the IPDE stuff that we have should create you a bias, meaning that when you do your analysis, you should be able to look at a chart and say, I think we're more likely to go long than short, or I think we're more likely to go short than long, or I have no idea what the hell is happening and I'm going to stay away from this thing, right? And when you look at your inside bars, only look to take it in the direction that your bias fits. So like if we're coming out of a strong bullish trend, right? And there's no structure until like a million miles up, I don't necessarily want to be short here. So I would say, hey, I'm going to trade this inside bar break as an entry technique into a trade, but I'm only looking for a breakout to the upside. Does that make sense? I'm not interested in a breakout to the downside because my analysis says like, hey, we should be going bullish. So I don't want to do that. But I'll only look at it to the upside. So that's why I call it like a bias break. That's my recommendation. But yeah, inside bars are cool. And like I said, if you ever want to like experiment with them, just go to, if you're here on TradingViews, go to indicator, or just use your eyes, do it old fashionedly, right? And like you'll see like a million inside bars. You can see right now, like, guys, if you were to trade every inside bar, do you see how many losses you would have? Like look at this chop. Loser, like so many losses in here. So this is why it's not a smart idea to trade every single one. You're going to lose pretty quickly. But if you can find the right type of one, you can make a pretty good trade out of it. There's also a cool technique. We won't talk about it here because I'm already distracted. But the inside bar fake break. And that's a decent technique, and we can see a few of those fake breaks here. Pretty much it's when it fakes to one side and then goes to the other side. But we'll save that for another day. Dollar yen, this was the one we were stalking yesterday. We got our pullback in our move. We made it back to the highs. No extension though. But this is our dollar yen trade from yesterday, if you guys remember. This is the daily, where all the daily charts are, boring. Let's go down to the 4 hour. Remember, we were looking for, on the 4 hour, a higher high, higher close, a pullback, which we got at the end of the live room, and then an extension up. Well, we got a retest of the highs. We just didn't go anywhere after that. So in the hourly, you can see that we had our move here. We had our pullback. Ooh, good example. Who can see it? What do we have in our pullback? This is going to be perfect with what we've been talking about all day. Inside bar. Yep. Or she's not here. She would have loved that. Inside bar, right? So if I bring my indicator in, which is slower than actually just drawing out the inside bar, you'll see that we have two of them. We should have two of them. Two inside bars right here. So in this scenario, if you remember, 1, we were looking for a pullback. 2, we were looking for a pullback to our previous level of structure. And 3, Chris reminded us that we had a nice 382 Fibonacci retracement right at that level, right? So we're looking for price action to pull back so we can be in a position to buy. Now, if we're looking to buy, I'm assuming we have a bullish bias. Would that be right? Probably. So this would be that scenario where it's like, hey, I have an inside, like I have a bullish bias. I'm a pullback trader looking to buy. Let's say that you are someone that uses or can use an inside bar as your entry technique. This would be a scenario where you have a bias inside bar approach, where you see this inside bar right here, and you say, hey, you know what, Akil, I'm going to, or not Akil, I hope you don't talk to me when I'm not here. That's weird. You say to yourself, hey, insert your name. I'm going to put my buy stop right here. I'm going to plan to put my sell stop right here. I don't want to put it in yet until after I'm sure. I'm going to plan to put my sell stop right here. And if we get a breakout of this inside bar only to the upside, only to the upside, then that's going to be my entry to get long. You guys with me? And then if you get long, then you would add your buy stop below. But in this one, you have no intentions of getting short, right? So you don't want to bracket it because you have no intentions of getting short. You don't want to get short, right? You only want to get long. Now, in this unique scenario, this is a weird one because you got an inside bar, and then guess what? You get another inside bar. So you would just adjust your bracket. It pretty much is close to the same thing, but then you would just adjust this to the next inside bar here. It's really small, so it's hard for me to move this thing, but you would just adjust whatever you're doing to that next inside bar. There we go, like that. And then boom, you're triggered right here on this very next candle. Stops are right here. And then you're looking to ride this thing to, excuse me, wherever you're looking to ride it to. Yeah, so if you're looking for the extension, you're still in this trade waiting. If you're a conservative trader like me when it comes to trend continuation, because I'm counter trend by nature, so my trend continuation trades have to be taken, or targets I should say, first targets, have to be taken at a retested structure. So this is what the risk reward looks like in that. That's pretty darn good. That's pretty darn good. What my risk reward was looking at in this trade would have been something like that, which isn't good. So you can see why I wasn't able to get involved. But that's not a bad trading scenario right there. Then of course the bigger targets for dollar yen, what were we looking at? We were looking at we're looking at a move up here. If you guys remember this. So we had that would have been your target one, where you make a little bit of money, you cover. And then this is where your real money would have been made, if you guys remember. Hold on. The targets are so big, I have to zoom this out. That's what you hope for, bigger picture. Does that actually happen? Who knows? But even if you get stopped out, you probably make something bigger. But that's the bigger move. So, yeah, good example of the inside bar. Again, using it as an entry technique. Again, that's something to experiment with. You see a lot of things like double bottoms and this and that, and understand that yes, maybe some of them can be used as strategies in their own right, but some of them could just be used as a portion of your strategy. For me, double bottoms and double tops aren't really a strategy necessarily. They're an entry technique as well. So same thing with like inside bars. They can be used as an entry technique, just an excuse for you to get into a trade. So always consider that. Hit that like button if you enjoyed the video. Hit that subscribe button. That way you don't miss my next upload. And as always, if you have any questions or comments, please leave them below. Lastly, if you ever had the question of, hey, what type of device do I need to be a trader? Check out this free guide. It's a step-by-step walkthrough showing you everything that needs to be included in a trading computer. And it's a great resource for someone that's looking to build their own, or someone that just wants something built for, right? I've used them twice and have been very happy both times. And I have no aspirations of building my own. Just tell me what I need and then build it for me. So check it out. It's free to you. And until next time, plan your trade, trade your plan. Take care.